Welcome to TradeNBI.com. This is John's reports for the 31st of March. Well, what a month we had. We saw a record drop greater than the Depression, and also a nice return back into it. We're hitting right up against the same, well, 26.35. I think we hit slightly above it. Let's take a look at what the high was so far. 35.75 has been the pre-market high, and we're coming right up on that 38% line at 37. So you have a confluence of key points there. So a break above it, and boy, you got, well, the next one, 26.35, 27.35, and then 27.80, all the way up at the top of it. So everything was good from a buy signal standpoint. We were talking about this softening right here that was starting to develop, and now you see right at the 38%, short starting to increase. So we're looking at minus 376, which means that green is falling below cyan in a no steal DOC steal reset, meaning we haven't dipped below the red and come back above within the last, since the beginning of the month. So that's a significant. Now, we've also gone from being deep oversold to where we made these lows and started to get the buy signal on much improved extreme histogram. Okay, that responded perfectly to that divergence, and then we've gotten the pop from it. Then we got overbought here as we're approaching the 38%, and we're still kind of in that range. Now, finally have what you might call helicopter money, whatever you want to call it, from the stimulus and that, and certainly that's provided support. At the end of the day, like I asked on the Skype chat the other day, was what are the earnings for the S&P 500 companies going to be? And if you're maintaining this valuation with what the earnings are, that's a massive increase in the multiple. So that says one of a couple of things. Some people say to me, well, that's not possible to have price where it is. Of course it is. If you are expecting a devaluation of the dollar significantly when you decide to create trillions out of nothing, hyperinflation, you go ahead and discount that value, and therefore this market price would be for adjusted US dollars in the future. So bear that in mind. It is not inconceivable. It's just foretelling the future. Not a good one. That would be suggesting hyperinflation. Of course, the bonus to hyperinflation has always been lower oil prices. We'll take a look at that one in a second. So NASDAQ, very different. It's already above the 38%. As long as it maintains that, I think it's going to be the leader going forward. We already have the split of cyan above in this particular case, but short-term buyers popping up, and it's going to be interesting at the start of the month. New fund money coming in will be interesting because I don't know how much there's going to be with vastly reduced payrolls. So will it have the same impact that it normally does on the 4th of the month? We're going to find out. And of course, the euro completely bankrupt. It was interesting in comments that Trump made about Italy, in particular, and the ECB, was that they were providing significant assistance. And that wasn't necessarily coming in the form of shipments of things other than shipments of electronic money via the Fed, doing what it did in the 2008 collapse. It provided the EU with, what was it, almost $11 trillion in economic support vis-a-vis the banking liquidity and dollar access. So it's still going to put pressure on the euro because the countries are completely shut down and immobilized. The real interesting question is now we're already starting to get reports of unrest in the south of Italy and potential riots. That's going to be the next key question in this kind of a lockdown situation. How long before people just rebel against it? And interestingly enough, the trials of the chloroquine and the Z-Paks are continuing, and we'll see very quickly if those results are effective. There's no reason why you wouldn't be able to lift quarantines if you could get testing. Now that you have that 5-minute Amgen test, you could test significantly more people. It would be cheaper and turn things back to work while still providing people with a remedy that will prevent them from going to a hospital should they have any difficulties. So there's potential hope in that aspect of it, even waiting for a vaccine of any type. But this oil, won't be long before oil is either zero or negative because there's nowhere to put it. They've drilled so much, there's not enough consumption going on, and without that, you're going to pretty much have people trying to get rid of what they've got at any price. So that's an interesting one. That helps prevent inflation, but when there's too many dollars out there, you're going to get gold spiking. We would expect to see a much bigger move on this. Still bullish because cyan's still below, but you get your first weakness here with steel crossing it, even with the cyan underneath. That sometimes presents the early part of the fade. It was an interesting day. We traded lower pretty quick on the dip in futures way back, but then pretty much immediately produced some buy signals pretty straight off. Even if you waited to the X2's P3s, which those functions will be on the indicators that are being sent out. So you'll have that capability. Also, MBI indicator and a bunch of other pivots and crossovers. So you'll just be able to check your library on the functions, and I'll have a list of them all. But some exciting things going on with the adaptations on those. So I think that's going to be really good. I kind of drew a box over here because even within this massive update, when the short signals came, they still work. You need your BK signal on that. But here's the issue you get. You'll get a dip to the 50% on a dip below the red line down here on the extreme. You would expect that to break through. When it doesn't break through, that's a pretty darn bullish sign. And so when you see that turnaround improvement of shakeout and an immediate rise without going into positive extremes, you usually get a pretty good carry through, and that's exactly what happened with it. It'll lead back to the highs, and that forces a break of the highs because shorts always usually tend to put their stops at the same spots, and it's pretty easy to see those get broken out when you put it just before the high of setup. But continued move of the shakeout, rising in that was still pretty good, and every time you got the little BKCS, you got the drawdown. It still gave you that. You just began to squeeze between the Morganachis. So in this case, yes, you broke the 50, but the range became much smaller as it moved through. It was still quite effective. I mean, even at the highs, still getting these P3 X2 buy setups within there, but they were all working. Now in after hours, we did fill back, not all the way to this dip. The positive extremes from here had been filled in on this previous one. Likewise, the dip over here took care of these, and that's usually how you get your healthiest rallies, when those positive extremes are filled in early. Likewise with the dips below the red line, not as much of a significance on those. You still have this one here just above the previous 79. Well, it's almost 2580 level, which is consistent with the daily as well. So it's interesting. Right now we're in the middle of a DOC spread that started a bar or so ago. Let's increase the size of this chart. Get a nice clean view of where we're at currently. It's so nice we can get up there. So we're getting some pretty big range bars within this pre-market configuration. But here you do have DOC steel reset right there. And what I like to point out is when you get this rising gold, you're looking for it to flatten out like this, and then your declining shakeout. So in this case, you have higher highs, declining shakeout. You had to wait for the beginning of that, which was right about here, before it flattened out, and then certainly on this magenta bar. Then of course, if you can nail it before the 76, you're in great shape. But certainly the ADM was right there, 24, and boom, we've already hit the 50. It came all the way down to 38%. With a dip below the red line already, so it's been nice to see that come back and fill in a little bit more. But all good stuff, and very exciting for the next month, because I think we're going to see just as many gyrations, and would not be surprised to see bigger moves, depending on which side can take advantage of the imbalance at this particular point. If we start to roll over more like this, then we could be revisiting that 23%. Of course, you got the 2505 there, then you have 2460, and of course all the way down to the 21. We just don't have any calling, so to speak, that it needs to fill from a technical standpoint. So A normal retrace from something like this would be a move back towards the 50% before you would have any leg down to the typical ABC configuration to the downside. As always, though, I will be on the Skype chat, putting up details, be sending out indicators today so that everyone will have them for the beginning of the month, since it's the middle of the week for it. Trade well, and we will certainly talk again later.